Hey everyone, good morning, afternoon, and evening, wherever you're from. Just testing if you guys can hear me loud and clear. Hey Nick, I'm good man, good. Thanks for asking. All right, hey Marandera, nice to see you. Right, David, I'm good too. Yeah, thanks for asking. Right, I had a short staycation in Singapore towards the end of the week, so it's okay. Managed to have some good time at the resort. Very tiring, right? Very tiring. I think yeah. When you're having, once you have a kid, the resort stays are a little bit more tiring than the usual, like break and relax. Because you're running around with your kid all the time. Yeah. Hey, Moss, nice to see you. Test. Yes, sound is good. It, okay, Norbert, nice to see you too. How do I get up so early? Right. I have no idea how I get up so early, man. Nick. I'm not sure if we'll be changing the timing to be 1 hour earlier than this because of the daylight savings, right? But if you guys have any preference, right, if you prefer it at this time, let me know. If you prefer it 1 hour earlier from this time, let me know too in the chat, right? And I'll be sure to try to tell them how we can switch around the timings a bit, yeah, because I know there's daylight savings in across Europe, right? There's also I think Australia too, right? So if you guys want to change that timing a bit, let me know. And yeah, David, man, yeah, holidays with kids is different, especially when they can start running around. Man, it is. My back, I need to go for a massage for my back. I keep half bending and running around with them. Christy, nice to see you. Okay, Norbert, I got that. We got G saying my Elliott Wave webinars. I'll try and unprivate it, right? I'll go check it out. There must be a reason why. I remember, yeah, it was freely available to everyone in the past, right? So I'll go check it out. If I'm not wrong, Cassandra has been covering the Elliott Wave series for the past few weeks. Have you been watching that? Right. Okay. Hey, Chaos, nice to see you. Right. Rafa, got it too. Right. Okay, Lusako, I got it too. Okay. We might, in that case, shift it 1 hour earlier. Leandro, nice to see you. Nice to see you. Okay, yeah, and yeah, they run so fast, man. It's like I don't know how to put it. But yeah, it's I've been well. I've been well. Thanks for asking. Right. I caught the Manchester United match earlier. Right. Terrible match. Not worth staying up for. Right. And watching them lose 2-0 to Newcastle is terrible. Not worth the sleep. Now these days I have to measure. If things are worth the sleep, losing the sleep for, right? But no, that was not worth it. Okay, but for today, live pre-market live analysis, right? We have a really amazing record of pretty good hit rates, right? And we do this every single week, same time, same place. Right? We try it to be the same time, right? Depending on daylight savings, right? Same time, same place, right? We look at what are the key news events for the upcoming week, and also what are the key trade setups. Now, if you guys can let me know in the chat, right? Do you prefer, in terms of analysis, do you like the 1 day time frame or the 4 hour time frame? Which one, if you have to pick only one, right? If you have to pick only one time frame, which would you prefer, the 1 day time frame or the 4 hour time frame, right? The reason why I'm asking is because currently we do a 1 day time frame, but if you prefer the 4 hour, let me know, right? And if there are more people who prefer the 4 hour, right, then I will if we don't have time, right, I'll just focus on that. Okay, we got one day, 4. All right, Nick, I don't get up every day at this time. I usually get up about 3 hours later from now. Yeah. Um, okay, G, thanks for letting me know. All right, so we got good mix of 4 hours one day, 4 hours. All right. Well, I mean, if you don't have the choice to pick between both, right? One day gives you yeah, Nick. I mean, not so much of a screenshot. Yeah, if possible, right? Sometimes to break it down, right, to see which one is best. Man, you guys have a have a pretty much a 50-50 split between one day and 4 hours. Okay, so what I can then do, I can try my best to cover the one day time frame, and if you need to zoom in a little bit more, we go into the 4 hours. Okay. Anyway, let's begin today's session. Right. Remember a disclaimer: everything in this webinar is educational in nature, so please do your own due diligence before you guys trade. Nothing in this webinar should be construed as investment or trading advice. Okay, and yeah, our agenda for today is really straightforward. Yeah, Nick, the top-down approach works well. I've been using it for a long time, right? And it is the ideal approach to looking at the charts, because you never know what big level you are missing if you only look at if you zoom down too much and look at a small time frame, right? But yeah, we have the key news events, then we look at the majors. Not only majors, but also like the look at the indices. I look at gold, silver, oil. Right, we're expecting oil to be quite bullish this week. But yeah, and if you have time, we'll do custom requests at the end of it. Okay, and yeah, so for those of you guys who are here for the first time, right, introducing your host for today, right, it's me, Desmond Leong. Right, so I run the award-winning research firm Everest Fortune Group, also the Forex Army. A finalist for 2019, 2020, and 2021 for Best FX and Best Equity Research. Work with many of the major financial institutions to help them forecast where the markets are heading. But we have a special partnership with IC Markets, where we bring you guys the good stuff, the juicy stuff, the stuff that help your trading reach the next level. Okay. Andre Munoz, nice to see you. Thanks for tuning in. Nice and early. I'm not sure where you guys are from, right? I do know where most of you guys are from, right? It seems like, yeah, if you're here for the first time, tuning in again, let me know, right? And yeah, I'm from Singapore, so if you're from any part of Asia, right, it should be about like 4 a.m., 5 a.m. ish kind of timing for you now. All right. HMH, nice to see you. All right, so let's begin with some of the key news events to watch out for. So not every key, so they're usually these key news events which are coming, but you do not know the outcome for. Okay, yeah, it's coming, but you do not know the outcome for. So not every key news event you would kind of have a forecast, knowing what the result is, so you can take a bullish or bearish position. All right, some of them, like the non-farm payroll, right, you can more or less the forecast, but what really would move the price of the markets is how different the actual result is from the forecast. Okay, all right, so sometimes we can take a position, sometimes you can't. All right. Chaos, right? Yeah, sure. I think Aaron can see the question. Do I trade? Yes, of course I trade, man. I wouldn't be allowed to do this webinar if I didn't trade. How long it took for me to be profitable or successful? I think I wrote it somewhere before. It took me about 7 years to be profitable. Right, I blew up multiple accounts, right? And even when I was profitable, I was not like really profitable right away. It took a while where, okay, a little bit of profit, then once you mastered trade management, it helps you become a better trader, right? So you can have profitable strategy, but if you have bad trade management, it doesn't help, right? So it took me quite a bit of time, right? But from the time of it's not a period of like, it's not a linear I guess it's not a linear progression where every year you get slightly better until you reach the seventh year and then you're a good trader, right? It's more like I was messing up for the first 6 years. Then on the seventh year, when you learn the right stuff, you tend to be a better trader, right? If you watch a lot of the previous YouTube live videos that we did, not the pre-market live analysis, but the previous YouTube live, right? You can see that we've consistently forecasted about a 70-80%, okay, more of 60 to 70% kind of hit rate for many of our forecasts, right? And it really is, what's the word for it? It's there's a methodical approach to analyzing and trading the markets that can help you do well. Make it on your what could have done differently to make it 1 year or 2 years instead of 7? Well, watching my webinars. if I had if I had someone, I guess in some sense like myself, to kind of help me filter out a lot of the crap. I mean, a lot of the noise that you get out there, right? I think it would have helped me a bit, right? Because a lot of the times I made mistakes, in all honest truth, was a lot of explorative kind of analysis, right? A lot of exploratory analysis, right? That's I'm not. I know a lot. I make a lot of fun with. I make a lot of fun of Baby Pips and Forex Factory, but it goes beyond that, right? Sometimes these days, have really good forex gurus out there, right? And you buy their story, right? You some of them are not even flashy, right? They look like genuinely good people. They spend a lot of time reading their methodology and learning it. Like one thing which I spent a lot of time, a lot of money learning, was this thing called Hurst Cycles, HURST, right? Paid for their program and stuff. I still think there's a little bit of value in it, but it didn't help me be profitable. In fact, the thing about trading, right? The thing about trading is that you can actually learn the wrong stuff, right? And it actually takes you, if you think about it, right? If you have this if you have this stadium, right, where you're all running in, it's a 400-meter race. You need to sprint in one direction. You're racing with everyone else, right? But the dangerous thing about trading is that if you sprint and run in the wrong direction, you can't just turn around and sprint in the other direction. You turn around and you sprint in the other direction. You still need to catch up you still need to unlearn and catch up from all the wrong things that you learned, right? So this was what I encountered, right? I needed to convince myself that this thing that I paid money for, this methodology I spent so much time learning, is wrong, right? Even when I'm analyzing the new way, a new approach, right? I'm still kind of looking at it. I'm like, maybe it could have worked over here, right? So there's a lot of unlearning that you need to do, right, before you can learn correctly, right? So in some sense, what could have proper guidance, better guidance would have helped, right? You guys seen me around, right? I think many of you guys have followed me for many years, right? Many years, yeah. You followed me, you've seen my track record, you've seen my approach to trading, right? I'm not a fly by night kind of guy, right? And yeah, so I guess you need to learn from the right people. And I guess if one other thing that I could have applied is approach to know that good trading does not need to be flashy, right? Good trading does not need to be flashy, right? And profitable, good lessons don't need to be expensive, right? So sometimes there's this notion that, hey, this is a free webinar I'm getting, right? It's not as valuable and it's not going to be as helpful as that $10,000 cost that I need to pay to get access to, right? So one thing that would really drastically improve my learning is to realize that, you don't need expensive costs, right? The best stuff can actually be free, right? I mean, we've always thought that there's no free lunch in the world, right? But the idea that IC Markets has spent years, building up this educational course and for free, right? It's something which, it doesn't occur to many people that, the good stuff and the good learnings, good teachings can be free, right? So session and things. That's right. Yes, I do share the strategies that I learned on the webinar. You can so okay. Nick, what do you mean a flashy? A flashy means that they are, they they try a little bit too hard to sell themselves, right? So I always am a little bit worried if people try a little bit too hard to sell themselves, right? If they are spending too much time showing people about their flashy cars, their watches, right? I believe that it's a warning sign when that happens, right? So I would that's one thing I would say, if you notice that anyone out there is spending too much time selling themselves, you probably want to stay away from it, right? um, yeah, thank you, David. All right. I just to point you guys, because I see G asking a question, right? IC Market's YouTube channel, right? Your channel here, playlist. A few of the things that I would kind of point people to, right, just to get a better understanding, right? One is the support. Nope, not this too. This copy link, the pullbacks and overlaps, right? Pullbacks overlap, I probably focus on this a bit. The swing high, swing lows. And it seems a little bit simple, but yeah, check this out. The index upon resistance series. There was one that I did. I think I'm not sure, is it the advanced swing trading series, but where was it? Gosh, the Fibonacci series. Yeah, the Fibonacci series here. Please watch it. I might redo it again because it's one of the most watched series around, right? So you can see the number of views here is crazy, right? So go check this out, right? Fibonacci series. There's my Elliott Wave series is over here actually, so you can go check it out. All right, I'm not sure if you can see it. Are you able to see it? Right, maybe you should be able to see it. All right, Yamilu, nice to see you. You're a little bit late, it's cool. Joel, thank you very much. All right, yeah, so go check this out. A couple of them over here for you guys. All right, and advanced correlation. You see me use it a lot in like today's analysis. Correlation helps you piece together a jigsaw puzzle when it comes to trading. Okay, but yeah, let's just talk about the key news events for the week. Okay, the key news events for the week. On Monday, I think there is the CPI, right? CPI, you kind of want to watch out for it. And the ISM manufacturing PMI. These two, right? Affects the USD, affects the franc. These are the two key news events that you want to watch out for, right? Given that we're about 20 minutes in already, I'll kind of just highlight the key news events for you. If there is what's the word for it? If it makes so if there are significant insights that we can extract from these news items, I'll let you know. But most of the time, we're just kind of looking at the difference between the actual value and the forecast. Okay. Because what would move the market is not the previous and the forecast. As you can see here, it's not the previous and the forecast, but it's the difference between the forecast and the actual. Okay, right? And personally, I don't have I don't do that much econometrics, like figuring out my own value, my own PMI value, my own CPI value. Which there is some people that do that, right? I don't do that, right? I've tried doing that, but I don't find that it's worth it. Right. Personally, I look at the numbers that come out, and I decide whether it's how you want to take a position from there. Most of the time, this affects you a lot more if you're a day trader or scalper, right? Tuesday, the key thing to focus on the cash rate and the RBA rate statement, right? It's forecasted to increase from 3.6 to 3.5%, right? But potentially a dovish hike. Since I think, if I'm not wrong, the Australian CPI year on year fell for 2 reported periods. So you kind of want to definitely take a look out for this, right? These job openings, one you want to take a look out for. Let me see. Official cash rate, same thing, official cash rate, same thing as that you can expect from Australia, right? You can expect on Kiwi, New Zealand too, right? There's this one that I guess we should keep an eye on, right? It kind of just probably going to reiterate the previous day monetary policy decisions, right? Just keep a lookout for that. Yes, the ADP non-farm employment change, you want to keep a lookout for that too. ISM manufacturing PMI, right? And I mean, yes, you have the unemployment change, right? Unemployment rate, unemployment claims, right? And of course, Friday is Good Friday, but but guys, yeah, we have Good Friday, and at the same time, we have the non-farm payroll, right? So keep a lookout for this, especially if you're trading, right? Yeah, it's a very it doesn't happen that often. Yeah, but we have yeah, it doesn't happen that often. But yeah, we have the non-farm payroll on a Friday, which is a bank holiday too. Expect a very very strong market movements. No, sorry, slightly less market movements, right? Even yeah, the USD is going to move a lot, but because of the other bank holidays, you will expect a little bit less, a lower impact on it. Okay, these are the few kind of key news events I would say we should keep an eye on for. Right. Chaos is asking, can you trade high profile news? Right. I don't really trade high profile news, right? Unless you have a very strong bias, or you on a certain data, right? Like the non-farm payroll, markets tend to fluctuate like crazy during the non-farm payroll, right? And unless you have you want to position yourself, on either side of the USD, whether it's going to strengthen or weaken, right? Otherwise, most of the time, it's I tend to stay away from it. This kind of big news announcements are what I call known unknowns. I know it's coming. I know this non-farm payroll news announcements coming, right? But I do not know the outcome, right? So what happens is that you know it's coming, but you don't know the outcome. So it's going to be a very big volatile news event, right? This tend to really really mess with your trading strategy on the lower time frames, right? It affects it less on the 4 hour and the 1 day time frames, but affects it a lot more if you're trading anything below 4 hours, like 1 hour 15 minutes, right? It tends to really really cause you to the markets get a little bit messy. Okay. I do trade crypto, right? And I do trade the 4 hour and the 1 day setups. I do make some pretty good calls too. Right, so let's begin the session, right? Again, you guys who have remembered from last week, we've been highlighting this resistance level on Bitcoin, right? The 28342 level. We've been highlighting that price would continue to reverse from this level, and it has continued to reverse from this level, right? The key level, so let me see if I have it here. So what I like to do is, where possible, I will review what we did last week, right? So you get a good gauge of what happened, right? So I think we had was this last week? 26 March, yes. Yeah, 26 March. So usually one of the first things that we do cover is crypto, if I'm not wrong. Was it crypto? Was it? Forgot to highlight the key levels here. Yeah, but for example, for Bitcoin, we've been calling the reversal for a while. There we go, right? And calling the resistance at 28342 level for a while already. Right, see 28342, right? Since then, price has continued to hold quite nicely below the 28342 level, right? So, one of the things I like to let people know, right? Right, one of the things I like to let people know is that in trading, you must know when to be bullish, you must know when to be bearish, and you must know when to be neutral. Okay, because sometimes there are big key resistance levels, right? And it's not easy to be outrightly bullish or bearish. You need to be what we call upside downside confirmation. We need a certain level to be broken to confirm the upside. So most of the time, because of the way we've been brought up, we want to have an answer to everything, right? So we look at the markets and we want to know, is it bullish or is it bearish? Is it going up or is it going to down, right? It's not very what's the word for it? It's not very a it doesn't. I guess the word would be it doesn't really sit well with people. When they think that, okay, I need to look at the markets and I need to wait for a confirmation, right? And that is what I tend to do a lot of, right? I look at the markets and the key thing that I need to know is whether there's a confirmation to play, right? Is it bullish or is it bearish or is it neutral? Why have we been neutral since these 28342 levels? Because it's a big, I've highlighted it last week. And true enough, you can see price has been fluctuating from this level down to this level, our support, and back up. So I say our analysis was successful, right? We're able to call the reversals between these levels, right? From here down to here, down up to here. So you notice that I didn't outrightly call a move down, right? I would be wrong to call a move down directly, but I was right to know that there was resistance, there was support, right? There will be these two levels that price would fluctuate around, and it has since done that, right? So I'll say spot on over here, right? Elliott wave structure, I guess I was looking a little bit at this kind of structure, right? Wave 1, wave 2, wave 3, wave 4, and wave 5, right? So I was thinking that there's a little bit of Elliott wave structure here, right? A 5 wave, and then we should be looking a little bit at a corrective wave. If I'm not wrong, it's a lot clearer on Ethereum, right? Ethereum, I think I have it here. It's a 1, 2, 3, A, B, C, 4, 5. So I've been looking at this for Ethereum that, we could be seeing a reversal from here. Same thing with Ethereum. You notice that we caught the reversal, and the same thing is that we need to wait for price to close below here to trigger the move down. It hasn't happened yet, right? But it is still at a nice bit of resistance. Okay, I do think it takes the cue from Bitcoin. Bitcoin is still the main thing. As long as price doesn't close, right? As long as price doesn't close above the 28342 level, we cannot be bullish yet, okay? So yeah, that's the key thing, and nothing much has changed on Bitcoin, Ethereum. 28342 still the key resistance level for Bitcoin, right? Why? It's because it's a big overlap, it's a big pullback resistance, it's a big 23, it's a big 38% retracement, right? It needs that level to be broken to make the move up, right? But as it stands now, no, I'm still not bullish yet, right? I'm a little bit bearish. Right, I'm a little bit bearish on it, right? But yeah, I'm a little bit bearish on Bitcoin, Ethereum, right? Seeing that price has slowed down quite nicely over there. Okay. 1, 2, 3, 4, 5, right? Bitcoin. My 1, 2, 3, 4, 5 for Bitcoin will be this, right? 1, 2, 3, A, B, C, 4, 5. This will be my kind of Elliott wave structure for it. Right, and the projection for it, the wave 5 one, about there, usually 61.8. But in terms of Elliott wave structure, this looks more like it, right? I am saying short term I'm thinking about this. This could be the Elliott wave structure on Bitcoin, okay? But let's make sure we cover everything else. DXY continued to drop very nicely as we highlighted. I do forecast it to continue to drop down, right? For dollar index. A little bit tricky. The DXY move is not as clear. I wish it was, but it's not as clear. I would say there's limited downside, right? There's limited downside with DXY, right? There is still a very nice support level over here, right? I would consider this as the big support level. For us to look at. Why is it a nice support level? Very nice bounce. You see another very nice bounce there, and I kind of expect price to kind of come down to this level, if it has tested it this many times in the past, right, we should be able to see it come down again. In terms of Elliott wave structure for DXY, for those of you guys who are interested, right, I do see a wave 1, corrective A, B, C2, wave 3, corrective 4, and wave 5. Okay? Now, there are two things that you want to take note of. There's a rule of alternance that says that the correction here, if this is a complex correction, this should be a quick correction, right? So there's a rule of alternance that I like in this setup, right? So this could be, like I said, 1, 2, 3, 4, 5, right? Yeah. So if you break it down into a smaller structure, right? 1, 2, 1, 2, 3, 4, 5, 3, 4. Yep. This would be the kind of move that I'm expecting. Yeah, this would be the kind of move that I'm roughly expecting the Elliott structure. So we should be seeing price kind of come down a little bit more. Just let me see the distance of wave 1. The distance of wave 1 projected onto 5, 100%. Yeah, we could see price come all the way down to here. So for those of you guys who kind of want to know what I'm doing, right, I'm taking the length of wave 1 to project into the length of wave 5, right? So that is 100%, right? The entire height of this movement, could be the height of this movement here, which would line up very nicely down here. Okay, so yeah, my view for DXY short term, right, is that we should be able to see a little bit of a 1, 2, 3, 4, 5, this kind of corrective movement down. A little bit bearish, right? It has broken enough levels. Key resistance level to look out for. This remains a key resistance level. Bam, this will be the first resistance over here. This will be the first support level over here. Okay, these are the two key levels to look out for. I expect prices to at least come down to here before bouncing up. All right, so over the week, bearish, because there's 4 or 5 bars should bring us down to here. So I'll be bearish over the week. Okay, let's see. If it breaks the 101 level, I think, well, if it breaks the 101 level, the next one will be a 61.8 retracement all the way down here. Okay, this 61.8 retracement is probably my favorite Nike tick level, 127. Yeah, there we go. All right, so the next key level it will come down to, if price breaks the first support, is down here. Okay, key levels to take note of, right? Pound yen, I'll check it later. I've been checking pound yen for I think a couple of weeks already, right? I think same view, nothing much has changed. I'll take a look at it later. Now, if we are expecting DXY to weaken a bit, that means we should be expecting euro dollar to strengthen a bit. All right, so this is the thing that we can expect. All right, and I can let you guys know too, right? You will notice that DXY and euro dollar move in opposite directions with each other. So you see, when one goes up, the other goes down. When one goes down, the other goes up. So you can see it's like a mirror image of each other, right? So this is what we call a negative correlation. One of the things that I like to teach you guys, right? So when it comes to negative correlation, right, it's important for us to line them both up together, right? So if I am expecting DXY to just drop a little bit over here, that means on euro dollar, I should be expecting it to rise a little bit. All right, so and as we can see on euro dollar, the Elliott wave structure is kind of similar. You got a 1, you got a 2, you got a 3, you got a 4, and you got a 5. Okay, right? You can see it's 1, A, B, C, 2, 3, rule of alternance 4, and 5. All right, so we should be able to see a move up to this level too. Yeah, so this would be one of the key resistance levels I'm looking at for euro dollar, right? So we should be able to see price strengthen to this level at least for this week. Remember, this is still a forecast, right? So it's not not a trade recommendation. Still a forecast for you to take note of. Was this level and then key level? Let me just check. A bit tricky, but yeah. A little bit hard to see, and this is why I let you guys know that you need to you need to watch the support and resistance video, because you need to be able to identify this kind of overlap levels, right? This kind of overlap levels where price react to it multiple times, right? But each reaction only leaves a cut of the wick, right? Because this would be my key support level for euro dollar. For DXY, it would be the equivalent would probably be about here, right? The equivalent would probably be about here, but its movement is not as clear as euro dollar, right? So this would be an indicative level for me first, right? So if euro dollar does break this level, right, we can see there is a decent chance that it might work its way down to the second support, right? But you have to take note of, right, that there is a nice little ascending support line over here, okay? You have to take note there's a nice little ascending support line over here. So what could happen here is that, you know, price could come down, test this level and come up here. If it does break these levels, you know, we could see a trigger move down to there, okay? Yeah, so please take note of that, right? Still continue to hold nicely above the Ichimoku cloud. So the only thing that will trigger a bearish move on euro dollar is if price breaks this level over here, right? It breaks the first support, it breaks the ascending support, it breaks the Ichimoku, right? Then we should see a bearish move down to here, right? If it continues to fluctuate around here, right, I will still be a little bit wary. But there's three things that it needs to break: the overlap, the ascending, the Ichimoku, for it to trigger the move down to second support. Okay. But yeah, so that would be the first support, second reset, correct? Pound dollar. We highlighted this level last week. You know, we highlighted the level 1.24404, right? 2440, right? It hasn't broken that level. And you know, it's right at that level, right? If it closes above here, then we expect the move up. We can see a move up, a 200 pips move up to there, okay? It's pretty straightforward move for me, pound dollar. I really like this setup. I really like this setup, right? Very nice resistance level that is attracted to a second resistance, right? The Elliott wave structure is not as clear as what we saw on euro dollar and dollar index, but this remains a key resistance level. We've been highlighting this resistance level, we've been highlighting this support level for a couple of weeks already. What I mean by that, what I mean by a couple of weeks, right? If you just look at our previous analysis, right, I think pound dollar has been one that we've been highlighting for a while. And jumping around. Yeah, the pound dollar analysis, you can see that yeah, we've been highlighting this resistance level 2440 support level for quite a while already, right? I think we've been forecasting quite well. See, previously we already highlighted that the move up to this key level, this was on 19th of March to 26th of March, we'll be highlighting this key neutral level. Been working out quite nicely, and it's nice to see that price is more or less right finally at the level that we've been looking at, right? So I've been highlighting the bounce, I've been highlighting the resistance. Now that it's here, right, let me think. Now that it's here, I need a break above first resistance to trigger the move up, right? But it does go in line with our dollar weakness, right? Because if I'm expecting DXY to weaken, right, then we can expect that to kind of just give pound dollar that little push it needs to rise up to first resistance. So I would wait, right? I'll kind of wait for a close above here, but you know, it's not as clear as euro dollar. and pound dollar. So in this sense, if I have to pick between a few setups, euro dollar and pounds dollar, euro dollar and DXY have a nicer setup. Okay, now I want to draw the correlation to dollar index. Okay, I want to draw the correlation to dollar index, right? So dollar index, as you can see over here, right? We've been highlighting the bounce. Sorry. Meditative relaxation. The setups, I try to share as many of these setups that I'm looking at within what's the word for it, within compliance limits, right? I can't outrightly recommend a trade setup, right? But I do let you guys know every single week the ones that the bounces that we expect, the reversals that we do expect, and we do review it every single week, right? So what I recommend you to do is to watch the previous webinars. We always look at the previous week's analysis as part of a review, right? So that's one of the things that we pride ourselves on. We don't just do an analysis and forget about it. We always review what happened in the past few weeks. And if you just look at this, right, the dollar franc calling the bounce from here and calling the reversal from here, right? Calling the bounce and calling the reversal. I think it was, what was it? Was it even the 19th of March? Was it here? Yeah, since we've been calling the like dollar franc reversal, we've been calling the reversal and the bounce for quite a while, right? No, this was on 19th of March. Why don't we look at probably on 26th February, right? I think on 26th February, we were already calling the reversal. You can see timestamp 26th February, calling the reversal from 94113, right? We're calling for it to come down. Oh, sorry, this is Kiwi dollar. Yeah, we're calling for the reversal for it to come down to the support level. Okay, and 94113, since then, price has dropped very nicely, right? From the 94113 level. 94113, yep, this level is since dropped to our support, since bounce, right? Yeah. No worries, right? Yeah, I'll try to share a little bit more on the kind of setups I'm looking at. What I feel is very, very important for you guys to take note is the thought process that goes behind this analysis. That's why I try not to just like show everything over here. What I like to do is, and I like come here, I like to draw it out for you guys, right? Why do I pick this support level? I pick this support level because of the bounces that happen over here, right? The multiple times price bounce from this level. And what we want to take note of for the rest of the week is that while people think that it's going to bounce up for the rest of the week, you want to look at this movement down here, right? You have a little bit more movement for price to come down to here before bouncing up. Okay, you just got a little bit more movement, which will give you just a little bit more movement for DXY to come down. Okay, so we are not exactly right at the level where you can call a bounce on a bullish bounce on DXY or a bearish drop on euro dollar, right? You have that little bit more level across each instrument, right? So when this happens, this is what I call we are close enough to a magnetic level, right? Magnetic level means that price tends to be attracted to this level. It is too nice a level. This resistance level over here, this support level over here, right? For dollar franc, this support level over here, it is too nice for price not to be attracted to it, right? So we have seen how magnets work, right? So how a magnet works is that you have, if you have a very strong magnet over here, right? You have a very strong magnet over here, right? And price, you have an object over here, right? Now the magnetic level is not that strong, right? As price kind of goes closer and closer and closer to the magnet, right, it gets put stronger. If you ever played with a magnet before, right, when a metal object is very close to the magnet, right, maybe about here, that is where it gets attracted really quickly to it. If it's at a distance, it might start to roll very slowly. Okay, right, so there's one thing to take note of when you are looking at this, when you are looking at these levels, it's too close for price not to attract it, right? So we expect dollar franc to drop a little bit more too, right? Dollar franc dropping, right, to this level, then we could see a small little bounce, right? So I'm looking to see and maybe play the bounce from here, right? I'm looking at maybe play the bounce from here. Over the next few days, we should see a little bit of maybe less indecision, because a lot of people are waiting for the non-farm payroll news announcement on Friday, right? But when it comes, everything lining up, you could see a nice little bounce over there. Okay, but if it does break that, then I would say the next key level that it should drop down to is down here, as a second support. Okay, as a second support down here. Resistance levels that we want to look out for. Bam, one very nice resistance level over there. First resistance, you can see price reacting off this level very nicely in the past, right? And the second resistance level to kind of look out for, I will just highlight it down at a little bit closer to price, but yeah, this one of probably have an intermediate resistance over here. I have an intermediate resistance over here. Okay, price is kind of still fluctuating around, not the key level. All right, thank you. Right, I glad you like the magnet analogy, right? So yeah, we should be expecting a little bit more of a price being pulled down to this first support level. Okay, so that means dollar yen to dollar yen has been, we did call this support level very nicely, right? So we can look at the previous analysis that we did. Well, did I spend that long on pound dollar? Yeah, on dollar yen, I think last week sorry, I can't find my analysis on dollar yen last week. It's somewhere here. I said I would timestamp it, but it's it's not. I didn't timestamp it properly. I will call on dollar yen. There it is. I think not much of a change from that we're looking at. I forget it. Right. I won't waste too much time looking at the previous one. Yeah, dollar yen, we still expect a little bit of a bounce. Yeah, very nice overlap first support level that we found. Right, price bounced quite nicely from it. It's still hard to say, right? Personally, I think dollar yen is a little bit in the middle of nowhere. I really like this overlap support level. So we highlighted this overlap support level. Price bounced quite nicely from it. In terms of Elliott wave structure, it's not even that clear. Man, it's crap. I will wait for a close below here again. I wouldn't really just go long or go short now. Kind of wait for price to close below here, trigger the move down to here. Okay, dollar yen wouldn't be my top setup for the week. Aussie dollar, we highlighted this first resistance and first support levels as the levels to be broken to trigger the upside and downside move, right? So this is what I like, right? So guys, this is what I mean by a good analysis, right? So sometimes it's not about, like I said, it's not about calling an outright bullish or outright bearish move, right? If you look at this analysis over here, why is it important? Right, why is it important? You can see this was last week's analysis, right? I was zooming in a little bit more, and you can see that the move over here is that I highlighted these levels over here, is that you need price to break below this first support to trigger the move down. You need price to break above the first resistance to trigger the move up, right? You have what we call a upside confirmation and a downside confirmation, right? Since then, what happened? Right, you can see that price has failed to break this level, right? It constantly was just testing this level many times and refused to break above it. And that is what I mean by identifying a good resistance. Because if you identify a good resistance, it tells you whether it is time to go long or is it time to go short. You don't just buy or sell. You need to look for confirmation. Personally, for me, right, I do think, we just might see a little bit of a confirmation on Aussie dollar, right? If there is a little bit of weakness on if you think about it, if there is weakness on DXY, it will give Aussie dollar just a little bit of push for it to close above, for it to close above this level, then it will trigger the corrective move up to there, right? So I'm a little bit more bullish on Aussie dollar purely because of the weakness we're expecting on DXY. But this level, right, the 23% retracement, guys, I've always told you, in Fibonacci theory, the 23% retracement is the key level to be broken, right? And is the key level. Same key level that we are looking at over here. If price closes above it, we should see a nice little correction up to 68.75. Okay, Kiwi dollar, same thing. I highlighted these levels last week as the same levels that we're looking at this week, right? That's really the same levels that we're looking at this week. Kiwi dollar, there's a nice little descending resistance line, right? Ichimoku, nothing much. Still requires to close above here to trigger the move up. But remember, the move up cannot go all the way up to here again, because now we have a descending resistance line that is kind of pushing prices down, right? So between both of them, you look at Aussie dollar and you look at Kiwi dollar. Both of them have upside confirmations. They need to break above a key level to trigger move up, right? So I'm neutral, waiting for a break on these levels. Okay. Dollar CAD. What was the move I caught last week on dollar CAD? I think, can't remember. Dollar CAD. Okay. Same ascending support line, kind of holding prices up quite nicely. Sorry, just give me a while to just figure out this move. It's going to be a pretty bold move. But I personally think that this could be the key, one of the key setups to look at out for the week. Okay. If price I have this feeling, okay, I have this feeling that we could see a break of this level. We could see, price with the weakness in USD, the strength on oil. I do think that we could see a break of this level to trigger a nice move down, right, to on the 132.27 level for dollar CAD. Right, this would be the main triggering point for me. If it breaks the ascending support, it breaks the overlap support, right, we should see a nice little drop. This will be the key level, one of the key setups. Its price is close enough to there already, right? Just like the magnet level, which I'm telling you, right? This is the magnetic level for dollar CAD, right? You can see price did get down a bit already, so I'll be watching this very closely. Right, I'll be watching this very closely, right? If it closes, right, this could be the move that we expect to trigger all the way down. The one call that I didn't do very well last week was oil. I'm a little bit upset, right? I thought that there would be a reversal, right? But there hasn't been a reversal. For those of us who are trading oil, the good thing is that we caught the bounce, but we didn't call a reversal, right? So that's one thing that kind of upset me a bit, right? We did catch the bounce on oil very nicely from here, right? I think we highlighted it from here that there was going to be a bounce. There was a bounce, but I kind of thought price would reverse from here. It looks so nice. It didn't reverse, so I'm a little bit bummed out on that, right? Took a position there myself, right? So yeah, win some, lose some. Very tough. It's honestly, the Fibonacci structure, the Elliott wave structure is not that clear for oil. I wish it was clearer, but it's not that clear. I can't draw any level, right? The oil is freaking terrible, man. What do I expect the oil? I expect oil to continue to strengthen up to the first resistance. Okay, I would say it's in between these two levels, right? But now that it's made such a nice bounce, it cleared these couple of levels. We could see it kind of accelerate up towards in between. We could see it being attracted to this level for oil, right? It's the key levels which I think you'll be attracted to, right? I think there was a little bit of a news event, right? I had it written down on my phone, right? There was a news event for us to watch out for. Saudi Arabia oil cut, right? I was looking out for this, right? Yeah, so this news event here, right, is a surprise oil cut, 1.15 million barrels. You can see it's just a couple of hours ago, right? This oil cut here would reduce the supply, and this would cause oil prices to go up, and that's why you're seeing oil prices strengthening today. But it should give us enough momentum to see price go up to the 81.70 level. Okay. Jesse is asking for dollar CAD. Break below 3497. If price breaks below 3497, and watch out for this ascending support line, right? I'd place less of an emphasis on the ascending support, but yeah, once it breaks this level, we should be you can start to scale into the position, right? You can kind of start scaling into the position, right? Once it breaks the ascending support, you can even scale in even more, because it kind of looks like price might be closing below that position already. So my entry for dollar CAD will be pretty soon. I do leave a lot of orders pending. I have a lot of pending orders, right? I don't wait for a confirmation candle for most of them unless it's a breakout. If I'm playing a reversal, I don't wait for the confirmation. If I'm playing a breakout, I wait for the confirmation. So in this case, right, I will wait for a confirmation candle here. But if I was playing the bounce, right, I don't wait for the confirmation candle, because by the time you wait for a confirmation candle over here, right, your risk to reward will be a little bit way off already, right? So if I'm playing the reversal, I don't wait for confirmation. If I'm playing the breakout, I wait for confirmation. Chaos, my answer to that will not be that amazing, right? Because I exercise a lot of risk management on trade. The most recently, I think it was 5.5 or 6% on the trade, right? But that was because I risked 2% on the trade and I had a risk reward of 1:3, right? So it doesn't sound that amazing. It doesn't sound like, you made 50% on a trade. If I told you I made 50% on a trade, I wouldn't be proud of myself, because it might mean that I didn't stick to my risk management strategies, right? Instead, I made I think it was 5.5 to 6%. I'm happy enough because I risked 2% with a 1 to 3 kind of risk reward, right? So not the kind of sexy answer you'll be looking out for, but yeah, in the world of professional trading, it's good enough. Yeah, for gold, we caught the reversal on gold very nicely here, right? At the same time, we've highlighted these two levels as the key levels to watch out for. Okay, and we have been right. Gold has been fluctuating between these two levels, right? You just need to see last week last week over here. I can't remember where the hell. I can't remember where was gold. I think it was one of the earlier moves. Yeah, you can see we caught the reversal on gold very, very nicely, and then from there I highlighted the two key levels for it to watch out for. Yeah, these are the two key levels for us to watch out for. First resistance, first support. Price has been fluctuating between those levels very nicely. I will wait for a confirmation, a break of either of these levels to trigger a move up or move down. So same move that we're expecting on gold. Okay. Now indices, nope, nothing much to look at. Oh yeah, if there's anything, maybe Nasdaq, right? We can look for a bullish trade on Nasdaq, right? If there's anything, probably a bullish bounce, a bullish breakout on Nasdaq. If you can try to get in on the pullback, right? You could play a pullback, and I would look at playing a move up, a move up to here as my first resistance over here, right? I would kind of look to play the pull. If you can wait for, if you are able to get in on the pullback, right? I really like this overlap level that has been broken, could play a nice move up. And if I'm not wrong, a little bit of a trend, a little bit of a bullish channel that we're seeing over here. Not that great, not that great, but this would be one of the nice little levels that are looking at for Nasdaq. Wait for a pullback to play a further move up. Okay. What's okay, wait, give me a second. David, I mean the close of the candle. So the first candle that once it closes below, right, that's my confirmation candle, right? What's the origin of the Nike tick pattern, right? It's me playing around with Elliott Wave a lot. Okay, it's me playing around with Elliott Wave a lot, and I finally managed to kind of figure out. It's part of my work on Fibonacci Confluence, but it was me really just playing around with Elliott Wave, Fibonacci a lot until I found it. Okay. I don't really have time to redo dollar franc, but yeah, we are just expecting. You can watch a replay, right? So Watson, you can watch a replay. You can actually scroll backwards to see my analysis on dollar franc. Okay. But yeah, nothing much that I want to highlight over here. The indices don't have that nice levels. Yeah, the indices, honestly, it's a bit crap. There aren't that many nice levels on the indices for me to really call a nice move. I want to say there is one, but there isn't. Indices has been a little bit disappointing for me. So this is kind of in line with what you expect on Nasdaq, right? Just that the Nasdaq, you look at Nasdaq and the S&P 500, Nasdaq has a much clearer move, right? The movements are a lot clearer. The S&P 500, this overlap over here is not as clear to find, right? It's not as clear as the Nasdaq level. So I am still bullish, right? You can expect a smaller move up on Nasdaq, right? Kind of seeing price kind of inch up towards here, right? But the movement wise is not as clear, right? The support and resistance wise is not as clear as what we saw on the on Nasdaq. Okay, really not as clear, right? It's terrible actually, if I may say the list, right? It's not that, the levels are not that clear. No worries, man, right? Chaos, I didn't have a mentor. Kind of wish that I did, right? But I feel like more than a mentor, I would what would have definitely benefited me was just being pointed in the right direction, right? So in this case, I'm pointing you guys in the right direction to go through what we've learned in IC markets, especially my own personal webinars that I've done, right? Just walking in the right direction to begin with is a lot more encouraging, because you can start to see the end in sight, right? You can start to see progress, right? It's like when you go on a journey, right? You're on the expressway, you're on the highway, you at least want to be moving in the right direction first, right? You don't want to be second guessing yourself. So the one thing I would encourage you guys to do is that, start walking in the right direction first, right? We got a lot of webinars I recorded here. I'm not just saying it because I'm doing it for IC Markets, right? I'm saying it because, we've had a lot of testimonials that pour in over time, right? That what they learn over here has changed their life, go from unprofitable, profitable, 40 to 50%, 50 to 60% hit rate. It all starts from here, okay? Now, just as you called it, damn, did I get it? Yep. Oh, look at that. Oh my God. There we go, man. That means dollar cat. Yes, yeah. So, yeah, kind of forecasted, all the gap up. Looks like it did good stuff for me. Damn, that's my move. It just gapped up. Man, you guys found out that I have a crystal ball or something. Yeah, if that's the case, right, this is a big resistance level to watch out for. This is a big resistance level to watch out for. I guess the key thing I want to highlight is probably the 38%. Not that clear. The 38% is not that clear, but it's a level that we have to watch out for this week because price has gapped up so strongly. Okay. Yeah, price has gapped up so strongly. So yeah, just kind of watch out for it over here. I do think there might be a very strong week that will kind of see a lot of fighting going around here. But short term, we should be able to see the reversal, right? This is a very nice level that we're looking at. So maybe short term we could see a reversal on it. Okay. Now, anyway, that's it for me, guys. Thanks for staying throughout. I like that today's we had a lot more questions on methodology to trading, approach to trading. It's not always about just the setups of the week. I think what's equally important is knowing how to trade, knowing the thought process behind how to trade, getting those little bits of trading guidance help you become a better trader, right? I think those are equally important too. Okay. Thank you, Andre. Thank you everyone for tuning in today's session. If you can help me smash the thumbs up, the like button, it really helps the YouTube algorithm identify us, these videos better, right? So it really helps. Thank you very much, guys. All right, thank you for tuning in. Right, remember to tune in about 12 hours, right, where it'll be a live analysis session with let me just check. If I'm not wrong, it's a live analysis session with Peggy, right? 4 times funded trader. She passed a funded trader test 4 times already, right? So yeah, really, really good. Massive respect for her, right? But yeah, live stream coming up 3rd of April. I don't think it's me, right? It should be Peggy. Right? I think it's Peggy, right? Yeah, so keep a lookout on that, okay? All right. Your coffee just kicking in, right? I need to get my coffee now, right? Thank you, meditative relaxation, right? Thank you, Yamilu. Thank you, Jesse, Marondera, right? Norbert, O'Shea. Hey, Darren, nice to see you again, man. All right. Nice to see you tuning back in. All right. My coffee will probably kick in about 3 hours. I'm going to get some sleep first. Okay, thanks, guys. All right, cheers. Peace out. Trade safe. Let's have a great week ahead. Right, let's have fun. Okay? Take care. Adios. Bye-bye.